This is Stock Market Cycles Update for the week ending February 12th, being recorded on Sunday, February 14th. I guess we should explain a little bit about where we have been. I'm Peter Eliades. Up to about the end of December, we were trying to do YouTube updates every couple of weeks, maybe every 2 or 3 weeks at times. And then the great COVID-19 came down, and at the end of December, I went into the hospital. I believe it was December 28th, and was in the hospital for 37 very, very long days. Believe me, you don't want to go through it. At one point, I was very close to triple organ failure, and was questionable whether I would survive. But through my own willpower and mostly through medical science and my faith, my Greek Orthodox Christian faith, a lot of prayers all around the world, we made it through. The tough part is over. That tough part is over. Another tough part is coming. Believe me, you're in a hospital bed for 37 days. You have to learn to walk all over again. And I'm not quite there yet. I shouldn't say quite. I've got a long way to go. A lot of work to do. Rebuild the lungs, rebuild the muscles. So for those of you that are curious, that's what happened. The medical staff at Clovis Community Hospital, where I was captured for 37 days, was wonderful. They were all wonderful. I'll single out one doctor, Dr. Aiden, who was marvelous. I don't know whether I single him out because he was that much better than everyone else, or because he was the doctor that finally released me and allowed me to come back home. So that's the medical background. That's where I've been, literally on the brink of death for the last month and a half. And now let's get to the market. The reason I'm calling this a potential market top, and I don't think it's going to be the important top yet, but it could lead to an short intermediate term decline. I'll give you several reasons for that. Here's one of them right here. This is the NASDAQ 100. And first of all, take a look at this trend line. We don't base our judgments on trend lines, but this goes back to the top of October 12th of 2020 and through a more recent top of January 25th. And you can see, I'll zoom in here in a second, you can see that we are up to that trend line again. Just a tiny bit away if we zoom in, so let's zoom in. There we are. Even with a zoom in, it looks like we've hit it. This projection is a nominal 20-day projection, 7 to 8 day offset, calling for 13,783, 13,894. These are intraday projections, and the high on Friday was 13,816.25. So it was well within the projection window. So this is one of the reasons why we're saying we may be at a short to intermediate term top. Let's take a look at the Dow and the S&P with this same offset. Okay, here's the S&P. Notice before this that there was an excellent projection here to the upside, a great projection here to the downside. About the only decline we've had this year was pinpointed by the 7 to 8 day offset nominal 20-day projection. And now we have a situation where, look at this. There's still a way to go on the Dow and the S&P for these nominal 20-day projections. 39.65, round that off to 66, and 39.82. And the high on Friday was 39.37. So that high on Friday was around 30 points away from the lower end of this projection window. Okay, now we have a statistics module. I don't know how many of you are acquainted with that, but the statistics module shows us that over the past 8 years, 68% of these equivalent projections have been met on the upside. But here's what we can do with this fabulous software. We can go here and say, let's say you missed the projection by a certain percentage of the average true range. The average true range is an indicator that almost all computerized stock market analysis calculate. So watch what happens if we go to 10%. This immediately goes to 71, and if you go to 20%, goes to 74%. So 74% of these upside projections over the last 8 years for the S&P have been met. Now, this is, you would take this away. When we get to that, subtract that 20% of ATR, this lower line here would be the target line for the projection. And that lower line is, it's about 10 points lower. So instead of 39.66, it would be 39.56, which means that you're only about 20 points away. So are we going to see this at the beginning of next week? That's always a possibility. But remember that the NDX, the NASDAQ 100, has led the market, and it has met those projections, the equivalent projections. Okay, well, I told you I'd show you the Dow also. The Dow is in a very similar situation. You can see 7 to 8 day offset, indicated right down here by the software, nominal 20-day projection. Let's zoom in on that. So the Dow upside is 31,697 to 32,186, a couple of hundred points above Friday's close. Will we get up there? We don't know. We don't know. It could happen. If it does, however, the market enters, I believe, a period both time-wise and price-wise of short to intermediate-term vulnerability. Let me show you a couple more charts quickly. Look at this. I must admit that I borrowed this trend line from Bob Prechter's Elliott Wave International, but it's a very nice one. You go back, this is on the Dow Jones Industrial Average, using the high in early October of 18 and the high in February 12th of 20. Those are two important highs. They led to significant declines. This high led to the greatest percentage decline from an all-time high in such a short period of time in history. So a very significant decline, and this is where we currently stand on that decline. Let me zoom in on this. There we go. We hit it slightly, overthrew it on Thursday of last week, and we're right up at that trend line, okay? So one more chart. One more chart. One more chart, and it's an important one. Daily advanced decline line of the New York Stock Exchange. Look at this, new all-time highs a few days ago. Came down a little bit the next day and then up a little bit on Friday. But this is the reason, it's one of the reasons remember we do have higher projections, but this is one of the reasons why we're saying this is not the important market top. Very, very seldom in history has there been an advanced decline line of the New York Stock Exchange going to new all-time highs at the same time as we simultaneously hit a very important market top. Almost always you will get a decline, a move back up again where the indexes, one or two or several of them, go to new all-time highs. The daily AD line comes to a lower high and does not confirm. That's it. That's a wrap-up of all that we're looking at. Not all, but a lot of the important factors that we're looking at. So I'm back in business. Let me know how you like the Ernest Hemingway beard. I am home. I've been home for about a week and a half now. Thank God I'm home. And that's it. Thank you very much for watching. I hope you enjoyed it. We'll be back with you again sometime in the next 1 or 2 weeks. Thanks for watching.